All right, everybody, this is John. Welcome to the free video. I want to take a quick look here at a couple of things. Of course, we've done so many things on daily and weekly charts, and although January daily charts are kind of back in vogue, I've been mostly living on the 30-minute chart and the 5-minute chart. That may imply that it's like the only thing I'm interested in right now is day trading. I like day trading, especially with the 0 days to expiration SPX, but I also am a huge fan of being able to put on trades that could last in this environment. Again, a couple of days, 2, 3, 4, even 5 days, where I don't have to stare at the charts. And what I found that's been great for that is a 30-minute chart overlaid with key daily technicals. Okay, so here's the 30-minute chart. This is the 5 EMA imported from the daily chart, the 8 EMA imported from the daily chart, and the 21 EMA imported from the daily chart. And then on here, I've got the ATR channels at 3.0, the 3.0 ATR off of the Keltner channels, and that's also based on a daily. So that kind of gives me a way to really drill down on what's happening here. And of course, we had all this chop fest around 3,800, and the moving averages were down, and price action was kind of negative. And then we got the breakout. We popped up through here, the moving averages crossed positive, and since then, this has been like the most unbelieved rally, in a long time. We've come down to the 5 EMA, okay, and then we came back down into the 8 and 21 EMA. We popped up again, came back down to the 8 and 21 EMA. Popped up again, came back down into the falling, to the rising 8 EMA. Popped up again, came back into the rising 8 EMA. So, our trend is up. We can kind of see the ebbs and flows, I think, a little cleaner on this, and we can play these. And so the question now is, because I'm getting a lot of bearish flack, and of course now compare this to the 5-minute chart, right? So here on the 5-minute chart, like, oh, we spiked up in here, great, let's do something. Let's sell a call credit spread. We spiked into this zone. Let's sell a put credit spread. So you're doing more day trades here, right? But for this then, so the biggest question I'm getting is, a lot of people I talk to can continue to be incredibly bearish. And I'm like, look, right now the trend is up. Obviously that can change, but I'm looking for this trend to continue higher at about mid-March. I do think we need to test the 21 EMA on the daily chart right now. That's 40.40. My plan right now is that if we can get down here, I would be buying some out-of-the-money call debit spreads 5 to 10 days out, with the idea that we're going to go up and make new highs again. So that's what I'm looking at here. I do think that, again, in the mid-March, we're going to be pretty bullish. Then it gets a little dicey. I think the second half of the year is going to be super dicey. But for now, you can be bearish, but pick your point, right? There's no need to be overly bearish right now, in my opinion, and I think the time will come. But in the short term, if you're going, if you're trading in the short term, either if it's a day trade, obviously, but a couple days at a time, just go with the trend, and you don't have to worry too much about, well, what about the monthly chart and stuff like that? It's just 2 days, it's just 3 days. So anyway, I hope it helps. Have a good one, and we'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.